Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from the story to their opportunities and risks. Today, I'm going to be covering Spotify. And I'm going to start with my prediction. I think Spotify is going to beat the market over the next 5 years. So let's get into exactly why and start with the business strategy. Overall, Spotify's strategy is to own your ears. This is a streaming content company. It's known for music, but it's also expanding into podcasts, audiobooks, and now video. The primary way that Spotify makes money is through premium subscriptions. And the business has grown on the back of subscriber growth and more recently price increases. But margins in that premium business are limited because Spotify needs to share some of that revenue with record labels and artists. About 70% of that premium revenue goes to those record labels and artist deals. That historically has limited the margin opportunity. So while there's growth in the premium business, the big growth opportunity for Spotify is beyond the premium business. And really, advertising is going to be the key for the company's 10x potential over the next 5 to 10 years. Spotify's podcasts now include ads, but the technology and marketplace is not really fully developed and hasn't reached a critical masses. The good news is that is changing for Spotify. The company now has 393 million ad-supported users, and that user base has grown 23% compounded annually since 2019. And the company just launched a new ad marketplace that's going to start with video, but it's going to make its way to things like podcasts and audiobooks. Artificial intelligence could also play a role in making it easier for advertisers to create advertisements for these audio and video platforms. So if Spotify can improve monetization with ads and go from a very, very low margin business to a higher margin business in that 40 to 50% gross margin range, this could be a much more profitable company than it is today. With the help of advertisements, growth in podcasts, growth in video, I think Spotify could grow revenue double digits and expand margins over the next decade. And management has done a really good job over the past couple of years of controlling their operating costs. That's why free cash flow has improved dramatically for Spotify. But there are, of course, risks, as there are with any business. Spotify doesn't own its content. So if users migrate to another platform, that would be a loss for Spotify. That's why you want to watch their monthly active user number. If that continues to grow, that's going to be a good sign. Ads also may not monetize as well as I think they could, because Spotify just doesn't have the scale of some of its advertising competitors. The stock's also no longer cheap. At 4.6 times sales and 48 times forward earnings, we do need to see growth on the top line and improvements on the bottom line for the stock to continue to rise. So what's my prediction? I think any company that can fend off a competitor like Apple, who's integrated its music product into its offering, but Spotify has beaten Apple, has more users than Apple has today, has built a larger music business. That shows you the strength of this business. I think the upside beyond music and into advertising is too big to ignore. So that's why I think this will continue to be a phenomenal growth stock, and I'm looking for more and more innovation. So to recap, Spotify is a leading audio content company. They want to own your ears. That's the start for the business. It's improving monetization through premium. The advertising is starting to grow and those margins are increasing as well. There's growth in podcasts, audiobooks, and video beyond music. Now at the Motley Fool, your comments make us all smarter. So please comment with your own research and insights on Spotify in the comments section below. Let me know what stock you want to hear about next in crunch time. And check out fool.com/invest to get to top 10 stocks to buy right now. Thanks for watching, everybody, and we'll see you here next time.